Everything you know about Wall Street may be built on organized crime. The Yakuza mastered power strategies long before modern capitalism existed. Japanese gangsters understood corporate structure better than most CEOs. Financial manipulation didn't start on Wall Street. It was perfected elsewhere. Corporate extortion and financial corruption became legal through institutions. This is not fiction. It's an economic conspiracy hiding in plain sight. Market secrets shape wealth and influence more than hard work ever will. Wall Street adopted the rules written by organized crime. In this video, you'll see how corporate power really works. From the Yakuza to Wall Street, the system is closer than you think. Stay until the end, and you'll never see modern capitalism the same way.
$80 billion a year. That's what Japan's most powerful corporation was pulling in at its peak, more than Honda, Sony, and Panasonic combined. But here's the thing. You've never seen this company on the Tokyo Stock Exchange. Its CEO has never given an interview to Bloomberg. Its earnings have never been filed with regulators. And yet, it had a formal headquarters with its name on the door, business cards for its executives, and an internal code of ethics that every employee was required to follow. I'm talking about the Yamaguchi-gumi, Japan's largest Yakuza syndicate. And if you think this is just a wild story about Japanese gangsters, stay with me until the end. Because what I'm about to show you will change how you see Wall Street, investment banks, and the entire architecture of modern capitalism. This isn't ancient history, it's happening right now, closer than you imagine. In 2011, Fortune magazine ran the numbers. The Yamaguchi-gumi's annual revenue was roughly $80 billion. To put that in perspective, that's more than the GDP of over 100 countries, enough to rank among the top 50 corporations on the planet. And the craziest part, they weren't hiding. They operated in plain sight, with registered offices, organizational charts, and a hierarchical structure that would make any Harvard Business School professor nod in approval. Now, you're probably asking yourself, okay, so the Japanese mafia made a lot of money. What does that have to do with me? What does that have to do with the financial system or the way power actually works? Hold on to that question. It's the key to everything that follows. We've been taught to think of organized crime as something separate from legitimate business. Criminals operate in the shadows. Corporations operate in the light. One is illegal, the other regulated. One is run by thugs, the other by professionals with MBAs and corner offices. But what if that distinction is mostly a fairy tale we tell ourselves? What if the line between the boardroom and the back room has always been thinner than we want to admit? I'm not throwing around conspiracy theories here. We're going to look at actual structures, actual tactics, actual historical parallels that connect the Yakuza's rise to power in post-war Japan with the financial strategies used on Wall Street today. Hostile takeovers, shareholder extortion, predatory lending, bid rigging, shadow banking, practices that made the Yakuza billions, and practices that, under different names and with better PR, made American financiers even more. Have you ever wondered why certain people seem untouchable? Why the same financial maneuvers that would land you or me in prison somehow become aggressive but legal when executed at scale? Why every major financial crisis follows the same pattern: reckless behavior, massive profits for insiders, catastrophic losses for everyone else, and then, mysteriously, no one goes to jail? The Yakuza figured out something fundamental about power a long time ago. They understood that legitimacy isn't about morality. It's about scale, about structure, about making yourself too big and too connected to fail. If that sounds familiar, you're starting to see where this is going. What I'm about to show you isn't just a history lesson about Japanese organized crime. It's a mirror. And once you see the reflection, you won't be able to unsee it. The connection between the Yakuza's corporate empire and the way power operates in American finance isn't coincidence. It's a blueprint. A blueprint that's been used, refined, and perfected over decades. So let's go back to the beginning, to the chaos and opportunity that created the Yakuza as we know them, and trace the path from post-war Tokyo to modern Wall Street. To understand how the Yakuza became the most sophisticated criminal enterprise in history, you have to understand the world that created them. Picture Japan in 1945. The war is over. Cities are rubble. The economy has collapsed. The government is operating under American occupation, and the black market has become the only market that actually works. Food, medicine, clothing, construction materials. Everything flows through unofficial channels, controlled by men who understand that chaos isn't a problem to be solved. It's an opportunity to be seized. This is where the modern Yakuza was born. Not in some romantic underworld of samurai codes and honor among thieves, but in the practical business of survival. These were men who saw a vacuum and filled it. They provided protection when the police couldn't. They distributed goods when official supply chains collapsed. They settled disputes, enforced contracts, and created order in a society desperately searching for stability. And here's the uncomfortable truth. In many cases, they did it better than the legitimate authorities. Does that sound familiar? Think about the 2008 financial crisis, when the banks collapsed and the government scrambled to respond. Who stepped in to buy distressed assets at pennies on the dollar? Who saw chaos as an opportunity? Private equity firms, hedge funds, investment banks. The same institutions that helped cause the crisis became the biggest beneficiaries of the aftermath. They weren't operating outside the system. They were the system. And just like the Yakuza in post-war Japan, they understood something fundamental. The people who control resources during times of crisis are the people who end up controlling everything. What does that mean for the money you see moving through the economy every single day? Hold that thought. The parallels go deeper than you might expect. The Yakuza developed a business model that Wall Street would eventually perfect. They called it Sokaya, a practice where Yakuza members would buy small amounts of stock in publicly traded companies, then threaten to disrupt shareholder meetings or reveal embarrassing information about executives unless they were paid off. Sound familiar? It should. That's essentially the same playbook used by activist investors and corporate raiders today. Buy a stake, make noise, extract value, move on to the next target. The tactics have been polished, the language has been sanitized, but the underlying logic is identical. If something just clicked for you, if you're starting to see connections you hadn't noticed before, drop a comment below. Tell me, have you seen these patterns playing out in industries you work in companies you follow? I want to hear it. Now let's keep moving because we haven't even scratched the surface yet. The Yakuza's real genius wasn't just in how they made money, it was in how they made themselves indispensable. Now I want to go even deeper into this subject, because what I'm about to share with you changes everything you thought you knew about the origins of organized power. The Yakuza didn't start as criminals. That's the first thing you need to understand. They started as something far more interesting. They started as problem solvers in a world where every legitimate institution had failed. Picture Japan in August 1945. 2 atomic bombs have just fallen. The emperor has surrendered. The entire mythology of an invincible nation has collapsed overnight. And in that vacuum, something fascinating happens. The old structures of power, the military, the government, the industrial conglomerates, they're all either destroyed or discredited. But people still need to eat. They still need shelter. They still need someone to maintain order when the official order has completely broken down. This is where the transformation begins. Many of the early Yakuza leaders were ronin, samurai without masters. Men trained for war who suddenly found themselves in a world with no wars to fight. Others were takiya, street merchants who had operated in the gray zones of commerce for generations. And others still were bakuto, professional gamblers who understood probability, risk, and human psychology better than any economist. These 3 groups merged in the chaos of post-war Japan. And what emerged wasn't just a criminal organization. It was an alternative economy, an alternative government, an alternative way of organizing society. Here's what the history books don't tell you. In those first years after the war, the Yakuza were often more effective than the legitimate authorities. The American occupation forces were overwhelmed. The Japanese government was in shambles. But the Yakuza? They had supply chains. They had discipline. They had a code of conduct that everyone understood and respected. They controlled the black markets, yes, But those black markets were the only reason millions of Japanese citizens didn't starve to death. They ran protection rackets, absolutely. But those protection rackets were often the only security available to small business owners trying to rebuild their lives. And then came the strategic leap that changed everything. By the early 1950s, Yakuza groups realized that the real money wasn't in gambling dens or protection schemes. It was in construction. Japan was rebuilding. Billions of dollars were flowing into infrastructure projects. And who controlled access to labor? Who could guarantee that projects would be completed on time, without strikes, without interference? The Yakuza had positioned themselves as indispensable partners in Japan's economic miracle. Now here's where the parallels to American business become impossible to ignore. While the Yakuza were consolidating power in post-war Japan, a man named Meyer Lansky was doing the exact same thing in the United States. Lansky, often called the mob's accountant, understood something that most criminals of his era didn't. The future of organized crime wasn't in violence, it was in legitimate business. He invested mob money in casinos, hotels, real estate, and financial instruments. He created shell companies and offshore accounts decades before those terms entered the mainstream vocabulary. He transformed the raw proceeds of illegal activity into respectable corporate wealth. The methods were identical. Both the Yakuza and the American mob realized something essential. Once you accumulate enough capital, the distinction between legal and illegal becomes almost meaningless. You can buy politicians who write laws in your favor. You can hire lawyers who find loopholes in regulations. You can fund charitable foundations that launder your reputation along with your money. The hidden truth that neither organization wanted the public to understand. They weren't trying to exist outside the capitalist system. They were trying to become the system itself. Think about what this means for a moment. Every major economic transformation in history has created opportunities for those willing to operate in the spaces between the old rules and the new ones. The robber barons of the Gilded Age built their fortunes through tactics that would be considered illegal today. Market manipulation, labor exploitation, political bribery. But we don't call Rockefeller or Carnegie criminals. We call them industrialists, visionaries, philanthropists. The only difference between them and the Yakuza is that the robber barons won the public relations war. And what if I told you these exact same tactics are being used in Wall Street today, but nobody talks about it? The backstage reality of power has always worked this way. The people who write the history books are the people who ended up on top, and they have every incentive to draw a clear line between themselves and the criminals they supposedly defeated. But when you actually examine the decisions they made, the methods they used, the mentality that drove them, the similarities are striking. Both groups understood that power comes from controlling resources that other people need. Both groups understood that violence, or the threat of violence, is simply a business tool. And both groups understood that the ultimate goal isn't to break the rules. It's to become powerful enough that you get to make the rules. Sit with that idea for a second. Because if you've been following along, you're probably starting to see the implications. The journey we're on here isn't just about understanding the Yakuza or organized crime. It's about understanding how power actually works in the world. It's about seeing through the stories we've been told and recognizing the patterns that repeat across cultures, across centuries, across supposedly different systems of government and economics. The impact of this understanding goes far beyond historical curiosity. It changes how you see the news. It changes how you interpret corporate behavior. It changes how you make decisions about your own life and career. The line between crime organized and business organized was never as clear as they taught us in school. And the deeper we go into this story, the blurrier that line becomes. If this is shifting something in how you see the world, I want to know. Drop a comment right now. The line was always blurry. Let me know you're seeing what I'm seeing. What we're about to uncover will completely reshape how you see modern business. When I began studying the Yakuza's organizational structure, I expected something crude and unsophisticated. Rough men making brutal decisions driven only by loyalty and violence. What I actually found shocked me. The Yakuza didn't just operate like a corporation. In many ways, they invented the corporate playbook decades before Wall Street figured it out. And once you see these parallels, you cannot unsee them. Let's start with the hierarchy. At the top of every Yakuza family sits the Oyabun, the father figure, the ultimate decision maker, the person whose word is absolute law. Below him are the Wakashu, the younger brothers, the lieutenants who manage day-to-day operations. And below them are the soldiers, the workers, the people who execute the vision. Now tell me, how is this any different from a CEO, his executive team, and the workforce beneath them? The titles change, the suits get nicer, but the underlying structure is identical. Power flows from the top down, information flows from the bottom up, and everyone in between is trying to climb higher while protecting their position from those below. But here's where my understanding really transformed. The Yakuza didn't just create a corporate hierarchy, they pioneered the franchise model. Each kumi, each individual gang, operates essentially as a subsidiary of the larger organization. They pay tribute upward in exchange for protection, legitimacy, and access to the broader network. They have territorial rights that prevent other kumi from encroaching on their business. And they have significant autonomy in how they run their local operations, as long as they meet their obligations to headquarters. This is franchising. This is McDonald's. This is the business model that built modern retail empires. The only difference? Instead of selling hamburgers, the Yakuza was selling services that polite society prefers not to discuss. Could you spot this structure in your own company today? The mentality behind this reveals something profound about organizational power. The Yakuza understood that you cannot control everything directly. No single person, no matter how ruthless or brilliant, can manage every detail of a sprawling operation. What you can control is the system, the rules, the incentives, the consequences. Create a framework where people are motivated to act in ways that benefit the whole, and the organization runs itself. This is management theory 100 years before Harvard Business School started teaching it. Now I want to talk about portfolio diversification, because this is where the hidden truth becomes impossible to ignore. The modern Yakuza doesn't just do one thing. They're in real estate, they're in entertainment, they're in construction, they're in finance. They operate legitimate businesses alongside their illegitimate ones, and over time, the line between the two has become almost impossible to trace. This is not the behavior of common criminals. This is the behavior of sophisticated investors who understand that the key to long-term survival is not putting all your eggs in one basket. Think about the decisions this requires. Someone in the Yakuza leadership, decades ago, sat down and made the same calculations that any private equity firm makes today. Which industries are growing? Which offer the best returns relative to risk? Where are the regulatory gaps that create opportunity? How do we structure our investments to maximize returns while minimizing exposure? The backstage reality is striking. Organized crime and organized capital operate according to the same fundamental principles. They're both trying to generate returns. They're both managing risk. They're both navigating complex legal and political environments. The only difference is who gets invited to the fancy conferences. And this brings us to Sokaya. Honestly, this is the revelation that really broke my brain. Sokaya were professional shareholders. Sounds innocent enough, until you understand what they actually did. They would buy small amounts of stock in major Japanese corporations, just enough to gain access to shareholder meetings. Then they would research those companies obsessively, looking for secrets, scandals, embarrassing information that executives wanted to keep hidden. And then, at the shareholder meetings, they would threaten to expose everything unless they were paid to stay quiet. Let me paint this picture for you. Imagine a corporate boardroom in Tokyo, 1985. Executives in expensive suits sitting around a polished table, shareholders filing in for the annual meeting. Everything seems routine. Then a man in the back stands up. He doesn't yell. He doesn't threaten directly. He simply mentions a name, perhaps a mistress, perhaps a bribe, perhaps a failed project that was buried from the books. The room goes cold. Within days, a payment is arranged. The meeting minutes reflect nothing unusual, and business continues. Companies literally budgeted for Sokaya payments. They factored extortion into their annual financial planning. Now here's what fascinated me. When I first learned about this, my immediate reaction was, that's criminal. That's clearly wrong. But then I started thinking about modern finance, and my certainty began to crumble. What exactly is the difference between Sokaya and what we now call shareholder activism? Think about it. Activist investors buy stakes in companies specifically to pressure management. They threaten proxy fights, public campaigns, hostile takeovers. They demand board seats, strategy changes, executive firings, and companies pay them off all the time. Through buybacks, through special dividends, through green mail payments that basically amount to go-away money. Same boardroom, different decade, nicer suits, fancier language. Could you tell the difference if you were sitting in that meeting? The impact of this parallel is significant. We've created an entire financial ecosystem built on the same basic premise as Sokaya. Accumulate enough ownership to become a threat, then extract value from that threat. Hedge funds do this constantly. Private equity firms have built trillion-dollar empires on variations of this model. We just use different language. We call it unlocking shareholder value instead of extortion. We call it corporate governance reform instead of intimidation. But strip away the fancy terminology and you're left with the same underlying transaction: pay us or face consequences. The journey from Yakuza boardrooms to Wall Street boardrooms is shorter than anyone wants to admit. The practices we consider sophisticated finance, hostile takeovers, leveraged buyouts, activist campaigns, they all share DNA with strategies the Yakuza perfected decades earlier. The transformation wasn't from criminal to legitimate. The transformation was purely cosmetic. The same behaviors got rebranded, regulated, and made respectable. And once you see this pattern, you start seeing it everywhere. If any of this is clicking for you, if you're starting to see the connections I'm laying out, drop a comment and write, "Same game, different suits." I want to know if you're tracking with me on this. What unfolded in Japan during the 1980s and 1990s was not a minor historical detail. It was a blueprint that reveals how legitimate systems can be quietly overtaken by illegitimate forces, and how that transformation can happen so gradually that almost nobody notices, until it's far too late. Picture Japan in the 1980s. The economy is absolutely roaring. Real estate prices are climbing so fast that the land under the Imperial Palace in Tokyo was famously said to be worth more than all the real estate in California combined. Let that sink in. One palace, more valuable than an entire American state. Stocks are multiplying, credit is flowing like water, everyone is getting rich, and everyone assumes the party will never end. This is the environment in which the Yakuza made their most audacious move. They didn't just profit from the boom, they embedded themselves into the very machinery that was creating it. Here's the hidden truth that most economic histories won't tell you. During this period, Japanese banks were lending billions of yen to companies that existed only on paper. Shell corporations with no real assets, no real employees, no real business operations. These weren't mistakes. These weren't oversights in due diligence. These were deliberate arrangements, because the people receiving those loans were connected to Yakuza families, and the people approving those loans knew exactly what they were doing. The mentality inside these institutions had shifted. It was no longer about legitimate banking. It was about maintaining relationships with powerful people who could make problems appear or disappear, depending on how cooperative you were. How would you react if you discovered that your bank, the one holding your savings right now, was playing this game? And this was just the beginning. The construction industry tells an even darker story. Japan was building constantly during this period. Highways, bridges, office towers, subway systems. Massive public works projects funded by taxpayer money. And behind the scenes, a practice called dango was operating at industrial scale. Dango is bid rigging. Simple as that. Construction companies would meet privately before public tenders and decide in advance who would win each contract, and at what price. No real competition, just a script everyone followed. The Yakuza served as the enforcement mechanism for these agreements. If a company tried to undercut the predetermined winner, they would receive a visit from people who were very persuasive about the importance of honoring commitments. The impact of this system was staggering. Public projects cost far more than they should have. Quality suffered because there was no real competition, and billions in taxpayer funds flowed directly into the pockets of organized crime. Every bridge, every highway, every subway station, built with dirty money baked into the concrete. The stock market was equally compromised. Securities firms weren't just manipulating prices on their own. They were doing it in direct coordination with Yakuza clans. The backstage reality was that organized crime had become a silent partner in some of Japan's most respected financial institutions. They would pump stocks together, time the dumps to maximize profits, use violence and intimidation to prevent anyone from exposing the scheme. Imagine being a legitimate investor during this period. You think you're participating in a fair market. You think prices reflect real value, but behind the scenes, the game is rigged by an alliance between suits and syndicates that you cannot see, and would never suspect. Could you tell the difference between a real market and a captured one? Then came 1991. The bubble burst. Real estate prices collapsed. The stock market cratered. And suddenly, all those loans that had seemed perfectly reasonable during the boom years were revealed for what they really were: financial fiction, propped up by criminal enterprise. The Japanese government discovered that trillions of yen in non-performing loans were tied directly to Yakuza operations. This wasn't a small problem on the margins. This was a systemic crisis that threatened to bring down the entire banking sector. The revelation forced the government to create an entirely new category to describe what they were dealing with. The Jusen, Japan's housing loan corporations, were exposed as barely disguised money laundering operations. Think of them as specialized lenders, similar to mortgage companies. During the boom, they had funneled enormous sums to Yakuza-connected borrowers who had no intention of ever paying the money back. The collateral was often fraudulent. The paperwork was fabricated. And now the Japanese taxpayer was on the hook to clean up the mess. Not the banks, not the criminals. Ordinary people paying for a crime they didn't know was being committed. This is where the journey into understanding modern finance takes a crucial turn. We tend to think of financial crises as natural disasters, unfortunate but inevitable consequences of market cycles and human psychology. The Japanese experience suggests something far more troubling. Their crisis wasn't just caused by irrational exuberance or speculative excess. It was caused by the deliberate corruption of institutions by criminal organizations who had figured out a fundamental truth. The most profitable crime isn't committed in the shadows. It's committed in boardrooms, with lawyers and accountants providing cover. The decisions made during this period created consequences that lasted decades. Japan's economy never fully recovered. They call it the lost decade, but it was really 2 or 3 lost decades. Growth stagnated, deflation took hold. An entire generation came of age in an economy that seemed permanently broken. And while there were many factors involved, the Yakuza infiltration was a cancer at the heart of the system. A cancer that made recovery far more difficult than anyone wanted to admit. Now I want you to consider something uncomfortable. How would you know if the same thing were happening today? Somewhere else in the world. Maybe closer than you think. The transformation from legitimate institution to captured institution doesn't happen overnight. It happens gradually, through small compromises, through relationships that seem merely friendly at first, through transactions that seem almost normal, if you don't look too closely. The people inside these systems often don't realize what's happening until they're too deep to get out. The people outside these systems don't have access to the information they would need to see the pattern. The Japanese experience wasn't unique because Japanese people are somehow more susceptible to corruption. It was unique because the bubble created conditions where enormous sums of money were moving through systems with insufficient oversight. And organized crime was sophisticated enough to exploit those conditions systematically. Those conditions can exist anywhere. They can exist in any country, in any era, whenever easy money meets weak governance. If this is starting to shift how you think about the relationship between finance and power, drop a comment and write, "The suit's new," because that's the part that never makes it into the textbooks. Once you begin connecting the dots between what unfolded in Japan and what now happens inside Western financial markets, the entire picture changes, in a way that might genuinely disturb you. And I don't say that to be dramatic. I say it because the parallels are so striking that ignoring them requires deliberate blindness. Let's talk about Wall Street. Let's talk about the practices we've been taught to view as sophisticated finance, as aggressive but legal capitalism, as the natural evolution of free markets. When you strip away the polished language, the expensive suits, and the prestigious office addresses, something uncomfortable emerges. The methods that made the Yakuza billions in Japan look remarkably similar to the methods that made bankers billions in America. The only real difference isn't the strategy, it's the branding. Parallel 1. Corporate extortion. Consider the Sokaya practice we discussed earlier. Yakuza-affiliated individuals would buy small amounts of stock in companies, then threaten to disrupt shareholder meetings with embarrassing revelations unless they were paid off. We call that extortion. We call that organized crime. But now consider what happens on Wall Street. Activist investors acquire small stakes in companies. Then they publicly threaten management, demanding changes, board seats, or payouts. Not because they genuinely want to improve the business, but because they want a quick profit before moving on to the next target. The mentality is identical. The mechanism is the same. The only transformation? One happens in the shadows. The other happens on financial news networks, with analysts praising the bold strategic vision. If you think that's a coincidence, think again. Parallel 2. Forced displacement. The Giagea model is even more revealing. Those were the Yakuza specialists who would force reluctant property owners to sell through intimidation, harassment, and making their lives unbearable until they gave up. Brutal, right? Criminal, obviously. But what about the American predatory lending machine of the 2000s? What about the foreclosure mills that processed families out of their homes using fabricated documents, robo-signed paperwork, and deliberate bureaucratic warfare designed to overwhelm people who couldn't afford lawyers? The impact was the same. Vulnerable people lost their properties to powerful interests who operated just barely inside the law, or sometimes clearly outside it, without consequence. The decisions to pursue these strategies weren't made by criminal organizations meeting in back rooms. They were made in glass towers, by people with MBAs, who called it maximizing shareholder value. Different language, same victims. Parallel 3. Rigged markets. The bid rigging that the Yakuza perfected in Japanese construction has its exact mirror on Wall Street. How banks have handled IPOs, bond offerings, price discovery. Investigations have repeatedly revealed that major banks colluded to fix prices, allocated shares to favored clients at the expense of regular investors, coordinated their actions in ways that would be instantly recognizable to any Yakuza boss running a dango scheme. The backstage reality of how securities are actually priced and distributed looks nothing like the textbook version we're taught about efficient markets. It looks like a cartel, operating in plain sight, protected by complexity, and by the assumption that nobody outside the system will ever understand what's actually happening. Are you starting to see the pattern? Parallel 4. Shadow structures. And then there's the shadow banking system, the constellation of special purpose vehicles, off-balance sheet entities, financial structures specifically designed to obscure what's really going on. When Japanese banks lent billions to Yakuza shell companies, we correctly identify that as corruption, as money laundering, as the criminal capture of legitimate institutions. But when American banks created elaborate SPVs to hide toxic assets, to move risk off their books while retaining the profits, to construct financial instruments so complex that even their own executives couldn't explain them, what exactly should we call that? The journey of money through these structures served the same purpose in both cases, hiding the true nature of transactions from regulators, from investors, from the public. Same function, same outcome, different continent. This brings us to 2008, and here's where the hidden truth becomes impossible to ignore. The American financial crisis followed almost exactly the same script as the Japanese crisis of the 1990s. Massive lending based on inflated asset values. Loans approved without meaningful verification of ability to pay. Complex financial instruments that spread risk throughout the entire system while making it impossible to understand where the exposure actually sat. And when it all collapsed, the same pattern emerged. The small people, the homeowners, the workers, the pension funds, absorbed catastrophic losses, while the architects of the disaster were rescued with public money and went on to collect their bonuses. The revelations that emerged after 2008 should have fundamentally changed how we think about the line between legitimate finance and organized crime. We learned that banks had systematically defrauded investors. We learned that rating agencies had assigned top ratings to securities they knew were garbage. We learned that executives had been warned repeatedly about the risks they were taking and had chosen to continue because the short-term profits were too good. And what happened? Almost nobody went to prison. The institutions were fined amounts that sounded large in headlines, but represented a tiny fraction of their illegal profits. The transformation that should have occurred, a fundamental restructuring of how finance operates, never happened. The system protected itself, just like it always does. Here's the provocative question that I think is worth sitting with. What exactly is the difference between the Yakuza and Wall Street? The methods map onto each other almost perfectly. The impact on ordinary people is comparable. The relationship with supposedly legitimate institutions follows the same pattern. The ability to operate above the law, to capture regulators, to ensure that punishment never matches the crime. It's identical. The only visible difference is aesthetics. The Yakuza operates in the cultural framework of Japanese organized crime, with its traditions and visible markers. Wall Street operates in the cultural framework of American capitalism, with its suits and golf courses and charitable foundations. Maybe that's too cynical. Maybe there are meaningful differences I'm overlooking. But I think the evidence demands that we at least ask the question honestly, without assuming that geography or dress code automatically confers legitimacy. The decisions made by financial executives in 2006 and 2007, decisions they knew would cause enormous harm to millions of people, were those really categorically different from the decisions made by Yakuza bosses expanding into legitimate business? Or were they simply made by people who had convinced themselves that sophisticated language made immoral actions acceptable? Before we continue, I want you to pause here. Think about your bank, your investments, the institutions you trust with your money. How would you know if the same patterns were operating there? If you're starting to see the financial system differently after this, comment below and write, "Same game, different suits." Because once you see it, you really can't unsee it. Everything we've uncovered so far points to a conclusion that most people are unwilling to articulate. And I think if you've followed along this far, you deserve to hear it stated plainly, without the usual softening, without the diplomatic hedging that makes uncomfortable truths easier to dismiss. The obvious takeaway from everything we've covered would be something like, Wall Street is criminal, or bankers are just gangsters in better clothes. And look, I understand the appeal of that framing. It's satisfying, it's shareable, it fits neatly into a social media post, but it's also too simple. And simple answers to complex problems usually lead us away from the truth rather than toward it. The real revelation here is something more fundamental, more disturbing, and ultimately more useful for understanding how the world actually works. Here's what the Yakuza's journey into legitimate business actually teaches us about power. Organized crime isn't an anomaly within capitalism. It isn't a deviation from how markets are supposed to function. It's actually one of the purest expressions of what capital does when there are no external constraints. Think about that for a moment. When you remove regulation, when you eliminate moral considerations, when you create an environment where there's no real accountability for harm caused, capital naturally organizes itself into structures that look remarkably like what we call organized crime. The intimidation, the territorial control, the extraction of value from vulnerable people, the capture of supposed regulators, the violence hidden behind layers of legitimate-seeming operations. All of this emerges organically when profit motive operates without boundaries. The only meaningful difference between a criminal organization and a corporation isn't the method. It isn't the impact. It isn't even the mentality of the people involved. The difference is simply whether the society in question has decided to legalize that particular form of extraction. That's it. The same behaviors, the same strategies, the same human consequences can be labeled either crime or business, depending entirely on legislative decisions. Decisions that often have more to do with lobbying power than with any coherent moral framework. Truth number 1. Legitimacy is a question of scale. This brings me to the first hidden truth about how power actually operates in our world. Legitimacy is fundamentally a question of scale. This isn't cynicism, it's observable pattern. Here's a concrete example. If you steal $1,000 from a cash register, you go to prison. If you steal $1 billion through complex financial instruments that technically comply with regulations your lawyers helped write, you get profiled in business magazines. You get invited to give commencement speeches at universities. You get called a visionary. Same action, different scale, completely opposite consequences. The transformation in how society treats you has nothing to do with the morality of your actions, and everything to do with the magnitude of your success. Think about HSBC. The bank was caught laundering money for Mexican drug cartels, actual cartel money, billions of dollars. The consequence? A fine that represented about 5 weeks of profit. No executives went to prison. The bank continued operating. Now imagine if you personally had laundered money for a cartel. Would you be free right now? The backstage reality is that our legal and social systems consistently reward successful predation while punishing unsuccessful or small-scale versions of the same behavior. Does that match what you were taught about justice? The Yakuza understood this instinctively. Their entire strategic evolution over the past several decades has been about crossing the threshold from illegitimate to legitimate. Not by changing their methods, but by changing their scale and their presentation. The bosses who once ran gambling operations now sit on corporate boards. The money that once flowed through illegal channels now flows through investment funds. The decisions that once happened in back rooms now happen in conference rooms. Nothing fundamental changed except the packaging. Truth number 2. Structure always survives individuals. The second revelation is equally important. Structure always survives individuals. We love stories about charismatic villains and heroic leaders. Our media, our entertainment, our entire cultural framework pushes us toward narratives centered on powerful individuals making decisive choices. But here's the truth. Systems persist regardless of which specific humans occupy positions within them. Yakuza bosses get arrested, get old, get killed, and the organization continues functioning without interruption. CEOs get fired, retire, face scandals, and the corporations continue pursuing the same strategies with the same outcomes. Consider Wells Fargo. After the fake account scandal, executives were fired. New leadership was installed. Promises were made. And then, more scandals, different faces, identical behavior. Or think about the 2008 crisis. Lehman Brothers collapsed. Bear Stearns vanished. New regulations were passed. And a decade later, the same risk-taking, the same leverage, the same fundamental dynamics were back. Why? Because the impact on real people remains constant when the system itself is designed to produce certain results. Replacing the individuals who operate the levers doesn't change what the levers do. This is why prosecuting individual wrongdoers, while symbolically satisfying, almost never produces meaningful change. When a Yakuza leader goes to prison, the organization simply promotes someone new. When a banker faces consequences, on the rare occasions that happens, the bank continues operating exactly as before. The mentality isn't located in any single person. It's embedded in the structure itself, in the incentives and information flows and power relationships that shape behavior regardless of who shows up to work on any given day. If the problem were bad individuals, replacing them would fix it, but it doesn't. What does that tell you about where the real problem is? Truth. 3. Real power prefers invisibility. The third truth might be the most important for understanding the world as it actually exists, rather than as we're told it exists. The people with the most power are almost never the people you've heard of. Real power prefers invisibility. The Yakuza bosses whose names appeared in newspapers were never the ones who truly controlled the organization's most important decisions. The faces you see in financial news, the executives who become public figures, the billionaires who court media attention. These aren't the people shaping the fundamental rules of the game. They're players, sometimes important players, but they're operating within a framework established by interests that prefer to remain unnamed. Think about it this way. You can probably name a dozen tech CEOs, but can you name a single person at BlackRock, the company that manages nearly $10 trillion and owns significant stakes in almost every major corporation on Earth? Can you name the partners at the law firms that draft the regulations, the lobbyists who shape the legislation, the family offices that control generational wealth? Visibility is for performers. Invisibility is for controllers. This is the final piece of the puzzle that connects everything we've discussed. The parallels between organized crime and legitimate finance exist because, at the highest levels, they often involve the same people making decisions behind the same closed doors. The separation we imagine between the criminal world and the respectable world is largely an illusion maintained for public consumption. The real journey of money and power doesn't respect those boundaries. It flows where it flows, controlled by people who understand that visibility is a vulnerability, and that true influence operates best when no one knows it exists. So here's my challenge to you, and this is something I genuinely want you to carry with you beyond this video. The next time you encounter a story about a brilliant financial maneuver, a genius acquisition strategy, a hedge fund manager who made billions through some innovative approach, ask yourself this question. If the exact same action had been taken by men with dragon tattoos in Osaka, what would we call it? If the same methods, the same impact on ordinary people, the same wealth extraction were performed by an organization we'd already labeled as criminal, how would the story be framed? The answer will tell you more about how legitimacy actually works than any economics textbook ever could. This changes how you see every financial headline from now on. Every genius acquisition, every innovative strategy, every bold investment move. You'll ask the question now, and you won't be able to stop asking it. If this shifted something in how you see these systems, drop a comment and just write, "Now I see the structure." And if you've made it this far with me, I genuinely appreciate that. This isn't the kind of content that goes down easy, and the fact that you stayed through all of it tells me something about how you engage with the world. You're not looking for surface-level takes or comfortable explanations. You want to understand how things actually work, even when that understanding is uncomfortable. That's exactly why I make these videos, not to confirm what you already believe, but to offer a different lens, a way of seeing the patterns that most people miss or choose to ignore. Now, here's what I didn't tell you in this video. Everything we discussed today, the Yakuza's transformation into legitimate business, the parallels with Wall Street, the 3 truths about how power actually operates, this is still happening. Right now. As you're watching this, there are organizations, some you've heard of, some you definitely haven't, that are using these exact playbooks, not in the 1980s, not in the 2008 crisis, today. And in my next video, I'm going to show you exactly where to look, the specific industries, the specific patterns, the specific warning signs that tell you when legitimate business is just organized extraction wearing a better suit. Once you see it, you won't be able to unsee it. But first, if this is the kind of thinking you want more of in your feed, then subscribing makes sense. It's how you tell the algorithm that this matters to you. And honestly, it's how I know to keep making content like this instead of whatever's trending this week. If you're still here at this moment, drop a comment that says, "I stayed for the structure." It lets me know this landed the way I intended, and it helps other people who think like you find their way to conversations like this one. If this shifted something in your perspective, even a little, leaving a like is the simplest way to signal that. It takes half a second, and it genuinely makes a difference in whether this reaches more people who need to hear it. Now, there's a video right here that takes this whole conversation further. It connects directly to what we just explored, and I think you'll find it hits just as hard. Click it, and let's keep going together.